Good afternoon, everyone. Today I'm chatting with Paul Andre Huet from America's Gold and Silver. In today's interview, we discuss silver, what's been driving the price recently, as well as antimony, and whether or not retail investors should be doing their homework on this metal. We also get into America's Gold and Silver, why Paul decided to join the company, what their key level business model and strategy looks like, and we get into where Paul sees the company in the long term. All right, everybody, enjoy the interview. Don't miss the Rule Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Paul, thanks for joining us today.
Thanks, Steve. It's a pleasure to be here today.
So let's start off talking high level silver, because silver's basically been on fire lately, and we love it as YouTube content creators that talk about precious metals. And specifically, we tend to focus a little bit more on the equity analysis side. But I have to say, whenever we cover anything silver related, the views we're getting right now are pretty strong. We've recently had a move in the price of silver. What do you think's driving silver right now?
Yeah, look, Stephen, it's no surprise that people are getting excited. You've got this perfect trifecta brewing behind the scenes. You've got, first and foremost, what I see and what we all see in the world is the demand is being crushed here. We can't supply enough. All of us together in the world, as we produce silver, we're still 200 million ounces short of the annual productions that we actually need. So because the demand is so much greater than the supply, that's creating an opportunity. You've got geopolitical and inflation fears that are happening. And then you see the amount of people jumping in on ETFs and investors jumping in. There's massive inflow. So you got this perfect trifecta brewing, and silver's popped up through $36 an ounce. And look, what's holding it back? Nothing, I don't think. We're in a perfect environment. I'm very pleased to have just joined America's Gold and Silver, at 80% of our production being silver related.
So I have to ask, just because whenever we have a chance to chat with CEOs of silver companies, just a hot topic always seems to be the silver to gold ratio. Do you think that it matters? Do you think that we should be trading at something closer to what we can mine it at, say 7-1? What's your view on the silver to gold ratio?
Yeah, you pointed out something that's valuable and very valid, actually. People don't understand the 7-1 ratio. We're mining 1 ounce of gold for every 7 ounces of silver. So the production is very disconnected from the actual pricing. So when you think back historically, what you're probably looking about a 15-1 over history, silver to gold. You pick a couple points in history, 1980, where the Hunts brothers did their market squeeze, and you see a 20-1 silver to gold ratio. 20 years later, in 2000, you're seeing a 50-1, and you fast forward 20 years again, and here we're sitting at 100-1. So in my opinion, there's no doubt that it matters, especially given that production ratio of 7-1. We mine 1 ounce of gold for every 7 ounces of silver. And as I pointed out, there's a tremendous deficit on silver. You got us producing gold. Most people who know me know I was a gold miner for 36 years. I've been a silver operator for a year now, or 6 months since I've joined. Gold is meeting the demands and overproducing. Silver, on the other spectrum, complete opposite, with all the artificial intelligence, with solar power, with EVs, everything that's coming up. Silver's just needed so much more than just a precious metal. It's not the same as it was. So to me, there's no doubt that it matters and something that needs to tighten up for sure.
So antimony has been thrust into the spotlight recently due to some actions from China. It's the media has given quite a bit of attention to antimony. Now, I know some of the projects that you guys have some antimony credits, and we'll get into that that part of the discussion later. But I just want to talk high level antimony. The USGS identifies that last year the US consumed just 24,000 tons of antimony. Is this metal as important as some people in the media are making it out to be?
Well, look, let's just think about it from a high level as we're talking here. You think if the USGS is determining we need 24,000 tons, how many of it are we actually producing in the US? The answer is zero. We're not producing anything. And you look back as early as November of 2024, when China says no more exporting silver into the US. That's meaningful. You got a new election coming in, new president, and you're saying, look, we can no longer accept any more antimony from China, which, by the way, is 90% of the world's producer. You got China, Russia producing about 90% of the antimony in the world. We can't consume it anymore. So it doesn't matter if we're 24,000 tons, Stephen, or 10,000 tons. We're not producing any of it. It matters. And in our case, we're in a very unique situation. We're the only mine in the United States at the moment producing antimony. The problem's been, some of the stuff we've inherited. We've been here 4 months, a little over 5 months. We weren't getting paid for the antimony. And I will talk a bit more about that in details. But antimony, as I see it in the future for us and our shareholders, it matters in the US. It's a critical element. It's a critical mineral for all kinds of strategic things in the world. You're seeing it pierce, what is it? I think $60,000 a ton it pierced. You're seeing some of these prices that are ridiculous. And I'll just give you a bit of a glimpse. Like at our Galena mine, we were able to look backwards at some of the previous assays and look at what was produced. You see that we produced over 18 million pounds of it. We never got paid any of it. So when you start thinking about the US as a whole, does 24,000 tons matter? Well, let's say it was 10,000. Let's say it was 50,000. We're still not producing any of it. The one we're producing is being shipped up north to Canada. So to me, it's something that is a gap and a void that needs to be filled. Somebody's got to fill it. And I think we can help that undoubtedly. And we're in a very unique situation, without doubt.
So, and I just Googled it for anybody who's trying to do the math at home. 24, you said 24,000 pounds of
Yeah. So
antimony.
18 million pounds is what we produced over about a 20-year period. So I'm looking backwards in time, and we announced this in one of our press releases. And this is obviously before me and my team, obviously, Stephen. But you start doing the math here and you start using spot prices. You're like, holy cow, that's over like $400 or $500 million of antimony that you produce. You got paid zero for it. That is something that's going to change in the future. There's a whole lot of changes that we've done in the first 100 days. That's one of them. And it's meaningful and it will matter.
But like we think about that. So your 18 million figure is cumulatively,
It
correct?
is. You're right. Yeah,
Yeah.
that's right, Stephen. Yeah.
Yeah. So, which works out to about just under 8,200 tons of a 24,000 market. So, like my concern about it, and ultimately, I'm a big precious metals bull, and we love talking equities on precious metals. But when I think about antimony, I just think it's not really that large of a market. Like just hearing. And I've never even really heard of you guys on the antimony side before. It just makes me think like, is there a lot of antimony just kind of sitting on the sidelines that companies like yourselves weren't selling that's going to be able to just fill this void for antimony as uh, op- operators like yourselves start to go, okay, well, we can now go sell that for a lot of money. You think that almost fixes the market?
Yeah. Listen, look, you're getting into it's a complicated answer. I'm going to be very honest, but let's try to simplify this. You're not wrong in saying, first and foremost, America's gold and silver, where does antimony come from? Like, I did my due diligence. I've been mining 37 years. I've been CEO and president of Klondex for 7 years. I was chairman and CEO of Carora for 6 years. Both companies, well over $1 billion, sold to different groups. When I did my own due diligence on America's gold and silver, I didn't even know about the antimony. We found out during the due diligence, and I'm like, wow, I didn't know they were producing antimony. To be clear, we got into America's gold and silver because of the silver, because of the copper, because of the lead and other things. Antimony is purely icing on the cake. And I'll tell you, it is a game changer. It is something that has caught our attention and we've gone, wow, geez, when we look backwards, we go, we didn't know they were producing it. We didn't know the mine had it. It's because it was never assayed. Nobody assayed this element ever. When we look at why don't we even have a resource on antimony ourselves? Can we fill the gap? Well, we don't even have an antimony resource. Only one reason, not because it doesn't exist in the mine, only because it was never assayed, Stephen. And then you talk about that 18 million pounds. This is a really important thing here. When you look back 10 years, go back 10 years and see the production of this mine. We've been averaging about 1.3 million ounces of silver. And the antimony is linked to the silver production, all right? There's about a ratio on it. But you start looking at, well, if they did 18 million pounds, going forward, what can they do? Well, we're taking the mine from that 1.3 million ounces of silver all the way up to 5 million ounces of silver. That's about 4 times the production than what's been done in the last 10 years. And there's a lot of things we have to do to get it done, and we'll talk about that. But when you start thinking about the future and what antimony can bring, it is very significant and it is meaningful. But you're not wrong in saying, look, America's gold and silver, why did we come here? Why did I come here? It was because of what I believed the opportunities existed in the silver and the copper and other things. Now, the fact that we get to enjoy this antimony ride is a tremendous opportunity, and we will take advantage of it at all levels. In the past, our agreements, our offtake agreements, prevented us from getting paid. We've just signed a great agreement with a group that we will be getting paid for antimony. Very, very different, huge differentiator. So look, again, just to repeat, we've always were focused at get the mine from 1 million ounces a year where it is to 5 million ounces. And in 2002, our mine did produce 5.6 million ounces. So it's been done before. So there's never been a metric in my entire 37 years of mining that someone else has been able to do that my team couldn't repeat. We will get to that 5 million ounces and more. We're not going to stop there. That will undoubtedly increase the antimony and copper and lead and actually gold. We produce a small amounts of gold that's 7 gram in our concentrate. So that antimony it's a tougher question. We can help fill that gap in the US without doubt.
Okay, so let's take a step back here just for our audience to set it up. It's the first time we've had you on. Let's talk about America's Gold and Silver. You guys have, as I understand it, two main operating assets. High level, just break it down for our audience who are new to the story and just trying to get their bearings.
Yeah, so America's Gold and Silver, as you said, Stephen, 2 predominant assets, both in production. One in the US, Idaho, in the Silver Valley, one of the greatest silver jurisdictions you're going to find in all the United States. Very blessed to have over 150 million ounces of silver of resource behind us. So a big, big growth table to grow from. And our second asset in Mexico, which is also in production. So we've got 2 producing assets. And just to give a bit, go backwards in time and say, well, what happened to the company? Why are we here? Well, the reality is the previous group was very focused at building a gold mine in Nevada. It was Relief Canyon. Spent over $100 million at permitting it, building it, getting into production. As soon as they started putting the ore on the liner, it failed. The ore would not leach. It was preg robbing and it didn't work. So we're shelving that completely and just focus. The opportunity that exists in front of us is because Galena and our Mexican asset, Cosala, were neglected. They were neglected for 10 years. They haven't had any exploration drilling. 2 great assets, no exploration drilling for 10 years. So what did we have to do on the first day we got here? Look, we only owned 60% of the asset out of the gate, Stephen. When we first got here, Eric Sprott, Canadian billionaire, owned 40% of our Galena asset. So we said, if this is going to work, we have to own 100% of the asset. For our shareholders, we've got to go to Eric and say, look, Eric, we want to create a different company. We'll keep the same name, but we want to own 100% of the Galena mine. So we got him to vend in his 40%. We raised that $50 million on day one. We changed the board. We changed the executive team. We put a strong mining team on the ground. And then more recently, we just raised that $100 million in debt so we don't dilute our shareholders. And alongside that, there was an $11.5 million in equity. So the company is a producing silver company. 80% of our production is silver, based in the United States, listed on the TSX, listed on NASDAQ. And some people keep saying to me, well, Paul, you've been there right at 6 months now. I kind of missed the ride. And I'm like, you haven't missed the ride at all. We haven't even started the production growth. All we've done now is secured and safely positioned our balance sheet for our shareholders so that we can deliver those projects to unlock the value to get this thing to 5 million ounces.
So you guys recently announced a strategic partnership with Teck. What can you tell us?
Yeah, so that was extremely important to secure the $100 million in debt. Look, I can tell you easily that we had bought deals in front of us. We could have easily raised another $40 million in equity, no problem. We knew that would be too dilutive for our shareholders. So we went out, we went to a group that we've known before. And if you look at our history at Klondex and Karora, they were both operational successes, both turnaround stories, just like this same thing is. And we did the same thing there. We raised debt in Klondex, we raised debt in Karora. We're raising debt here because we know we can repay it. We do not have to dilute our shareholders. And how did Teck come in here? Well, when we raised that $100 million in debt, Stephen, they made it a condition to raise $10 million in equity. So we could have used traditional financing with a banker and issued that equity at a 10% discount. Instead, we went to Teck Cominco and we went to Ocean Partners, two groups that we work with great. And what we needed to do was secure a home for that future growth. Remember, if you look backwards from 2024 to 2014, we're producing about 1.1 to 1.3 million ounces a year. We're now going to 5 million ounces. So we've got to go to Teck Cominco and say, guys, our production is going to increase. So we need to secure a home for that. And the guys who issued the debt said, look, you got to work with Teck. You got to show us that you're not going to get to 3 million ounces. Then all of a sudden, there's nobody who can take the additional capacity for that concentrate. So securing that home for our 5 million ounce plan at a premium was, well, it was a game changer, right? Again, we had conventional bankers coming up to us and say, Paul, look, we'll give you the debt. We'll give you the equity. I'll give you the debt. Give me an 8-10% discount. We said, no. That's why we tapped Ocean Partners, Teck on the shoulder. We met our condition of raising a bit of equity, which was that $11 million, but we raised it at a premium. We got it at about a 15% premium, which was, if you ask me, out of the park. And look, I've never been more aligned with the shareholders in my entire career. I have a wife and 7 kids, Stephen. I put the most amount of money in our entire lives into this. It's the safest place I've ever put our money ever. It's a big investment. It's not at risk. It's not a big bet. People say, well, that's a pretty big gamble you did, Paul. You own almost 25 million shares. I said, it's the lowest gamble I've ever had in my life. It's the best investment of my career.
So where do you see the company in, say, 5 to 10 years? Like, I imagine if you are making this big of a bet on it, like you said, you just put your family's livelihood on the line here on this company. Where do you envision the company in 5 years? Are you trying to build it up to get taken out? Are you trying to build a major silver producer? What's your long-term vision here?
Yeah, look, we're gonna walk before we're running here. So 5 years is a bit further out, but I'll start talking. Maybe I'll condense it to 12 months. But getting these projects, we have some very critical projects now that we've secured our balance sheet and we're in a commanding position with our balance sheet. We find ourselves in a unique situation to do some very important projects that grow the production. We're a growth story, true and true. Now, if you look at what we did at Klondex, we grew the story, but we consolidated a district in Nevada. We started out with Fire Creek, bought Midas from Newmont, bought Hollister from Waterton, consolidated the district. Karora, we did the same thing. We started off with Beta Hunt, we bought Spargos, we bought Lakewood, we bought Higginsville, we consolidated a district. There's no difference here. It's about first step is getting the mine right. The mine should be making us money. We shouldn't be going out to the market, tapping people on the shoulder, getting money. Where our money has got to come from is from the mine. And with these silver prices rallying, look, there's no reason for us not to be generating strong cash flows. We get these projects done, and there's about 4 or 5 projects repairing the shaft so we can increase capacity. That's very important. Changing the mining method, Stephen. It's so critical that we change the mining method to adopt the long hole mining method. Putting in a backfill station, a new plant, and then putting in new equipment, and all this at the helm of a new leadership team. Putting a new leadership team to deliver all these things puts us in a position to get to that growth to go from 1.3 million ounces to 2.5 million, to 3.5, to 4 million, then on to 5 million. You start getting to those numbers and you couple Mexico, that's a $2.5 billion company every day of the week. We're trading at about a 0.6 times NAV here. We're very, very undervalued still at this point, but we have the runway and we have the track record to deliver on these projects. These projects that we got in front of us are exactly what we have done our whole career. We are turnaround guys. We put our money where our mouth is. We're alongside our shareholders. We're along this ride and we're very excited about it. We're not looking to sell this thing out. We'd love to build a silver empire in this great from this starting point. So we're quite excited about it.
Paul, one thing I got to ask you about is the exploration strategy for the company. What can you tell us there?
Yeah, look, Stephen, that's a great question. Again, I'm gonna talk back about what happened. When you think about building Relief Canyon, raising over $100 million to build the mine in Nevada, it made Galena and Kosala neglected. They were neglected for years. There hasn't been $1 million. There hasn't been any money spent in a decade in exploration at both of our assets. You want to talk about opportunity? We're in the silver district in Idaho here, one of the best belts you're going to find. We've got Lucky Friday next to us. We've got Sunshine. We've got Bunker Hill. We've got Perpetua. Everyone around us. One of the best jurisdictions you're going to find. No drilling, exploration drilling in 10 years. So we're extremely excited. The first drill holes we have drilled below our feet hit 3.8 meters of 960 grams silver. Like, we're talking phenomenal grades here. And then we get the offset of the copper, the gold, and the antimony, like we talked about earlier. And then you bring us over to Mexico. The last 10 holes that were drilled there about 5 years ago created the mine that we're heading to now, EC 120. We're actually going to El Cajon 120 right now. We'll be there by the end of Q4 this year, mining into that heart of it in 2026. So both mines are getting into new zones, new areas, new growth, none of which have had any exploration. So for us, it's always that drill bit matters a lot. Putting money into the drill bit will turn into value for a share price for our shareholders. And it always does. Always, always. Once you can start drilling and start showing longevity and mine life, we will create value from a drill bit. And this is not unlike any great exploration story. There's tremendous upside for us because it hasn't been done for over a decade.
So, Paul, what can you tell us about the share structure? As you can imagine, we are a small cap platform here in Canada. It's one of the first things that we chat with retail investors about whenever they look at companies. There's just, and I'm not, I'm not suggesting anything about you guys here, but it's just a question that always gets asked. So what can you tell us? Who owns the shares? At what prices were most of the money raised? What are the things that you can tell our audience to give them comfort in the share structure?
So let's just go with our top shareholders. Number one, obviously, Eric Sprott owns about 20% of the company, Canadian investor. Most people know him well in Canada. When we got here, Stephen, 4 or 5 months ago, we looked at the shareholder register. We had about 8% of that register that was institution, and the other 92% was retail. And look, trust me, I love having retail shareholders. I enjoy it a lot. They help us with liquidity. They help us in a tremendous way. But getting a secure baseline and foundation of institutions is also very, very important and critical and strategic to our long-term success. We did this time and time again and again. I know I repeat Klonix and Karora, but they were great success stories. They were things that the team have done, and that model is a rinse and repeat. So in this case, we're sitting over 60% institutionally held already. That's pretty quick in that 4 or 5 month time frame. That took us 2 years to do that at Karora. It took us 2 years to go from about 8-10% to 60%. We're already over 60% institutions. And now that we've raised again the money and people are not worried about us going out to raise, we don't need to go raise equity to dilute ourselves. We're not a good short. Obviously, if people were shorting us now that we put out the 100 million and the 11.5, they're like, oh my God, we're squeezing them out. We're in a commanding position to let this share price really start rocking and rolling here from this point. So we've got Eric Sprott, we've got 60% institution. You got the management team and board of directors that owns about 10%. And look, I always say myself, go on SEDI, look at the filings. Myself, I bought these alongside Eric when we sold Karora. So I put in a big position. But again, it's the safest investment. It's not a bet for me. I don't roll the dice on a wife and 7 kids. I'm not rolling the dice. I'm saying this is a very strong investment. This will deliver. All we need to do is do what we do best. Focus, deliver. Look, I was a miner myself for 13 years before I ever got a mining degree. I know what it's like to run a jackleg. I know what it's like to be underground drilling and blasting. It's what I do best, but I'm surrounded by people who are like-minded like me with Mike Doolan, my COO, our CFO, Warren. We've got a very strong team with our executive team, a group that has proven track record to do this.
All right. Well, Paul, thanks very much for hopping on here today. I appreciate your time, and hopefully you'll come back on here in the future as you continue to roll it on your strategy.
It's great, Stephen. Thanks a lot and have a great day. And we're looking forward to more updates.
All right, everybody. Thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. Guys, if there's companies you want us to have on that we haven't had on yet, please let us know in the comment section. We're always looking for new stories. Thanks for watching, everyone.